Hello and welcome everybody. My name is Joey. I'm the founder and creator of myatmm.com or myatthemoneymachine.com. This is in fact actually my first video, kind of like the launch of the website, so to speak. In any case, as you can see on the screen is the dashboard of the web application that I've come up with. Basically, been trading for a couple of years and started doing options, I guess, over the last year or so. And over the course of doing that, working with spreadsheets and just different calculations and stuff like that, I've come up with this application to basically manage my trades. So what this video is just I'm just going to be doing my weekly. I do this pretty much every Sunday. I trade weekly options. I focus on those primarily. Don't really mess with any of the other options. Focusing on covered calls and cash secured puts. So, any case, let's go ahead and get started. I do use Robinhood for the trades, and most recently, from this past week, I got assigned on several of the cash secured puts that I had in my queue. So I'm just going to go through the web application. Basically, in the cost basis section is where I manage those positions in play. So let's go ahead and just go through and take care of the assignments first, just because that's the way I like to do it for now. So the first one is this symbol. So let's see here. All right, I was assigned on 3 of them. So assigned. So it'll be 300 shares. The assignment price was $1.50. So submit that. All right. So, right here, gotta click save. Move that down. So I was assigned on 3 of those. So move that down. All right, this is done. And delete that. Get rid of the collateral. All right, where are we at here? So that's us bought right here. We got assigned earlier this week on one of those. We had bought originally 4 contracts, and one of them did get assigned earlier this week. I guess Wednesday night. So in any case, I went ahead and, since I got assigned on it early, I went ahead and sold a call on it early. So when we come back through here, I'll have to basically be selling 3 more calls, 3 more covered calls on these 300 contracts, or 300 shares that just got assigned. So anyway, let me clear this one out. I think I got everything. I recorded the stock purchase, recorded the collateral removal. So my average right now is 181 on that. Okay, so let's go ahead and delete that. I'm just going through my emails here. So next one, we'll just go to MVIS next. All right, so this put got assigned as well. So stock 200 shares. The assignment price was $3.50. Submit. We click save here to get this record to show up down here. All right, and then we move it down to prepare to add it. Click save to commit it. I'm going to close that position. And the collateral, we can remove the collateral because by submitting it down here with the stock, it's added it to this cost right here. So we don't need it in the collateral anymore. All right, so that's MVIS. Assignment is done there. All right, let's move on to the next one. I got assigned on 5 of them. So 5 of the cash secured puts positions that I had got assigned. It's not unheard of. One thing that's funny about assignments is they're supposed to be early assignments are supposed to be random and rare or whatever. At least that's what I've heard. My experience has been they're not rare at all. I get assigned pretty regularly. So I think it's kind of funny that they say it's random, and I randomly get selected a lot. Maybe I should play the lottery. I don't know. All right, so the next one is rum. Okay, so I got assigned on the puts. I got several positions, as you can see. So I actually got assigned on the $10 one. Yeah, the $8 one expired, so I got to collect that 30 bucks for free. Um, this one did get assigned. It dropped just barely below 10. All right. So stocks, 100 shares. The assignment price was 10 bucks. And again, we click this to get this record to generate so we can move it down. So we can click save on that. All right, and we can remove this now. Okay, so we now own 200 shares because the 200, the other two puts did not get called, so we didn't have to do those. So 200, we no longer have any collateral because there's no puts on the board. So let's click save on that. So as you can see, my average is 824 on that, so pretty low. We're doing pretty good on this one. All right, make sure that all this is cleared up. Yeah, it is. All right, and then we got this one, NVEX, my problem child. Got stuck in this one early on about 6 months ago, and I'm just trying to make lemon out of lemonade with this one pretty much. Originally started out at like $40 a share when I first got into this thing, and now my average is down in the 32 range from different things that I've been doing. 25 if you include all the credits that I've gotten along the way. So anyway, okay, so these two contracts did not expire. They actually got assigned. Both of them got assigned. It dropped like $5 this week, so that's kind of crazy. So anyway, all right. So this got assigned. 100 shares, 21 assignment price. Click save on that to get that record to show up down there. We're going to go ahead and click sign on this one. Stock 100. It was assigned at 24.50. All right. And again, click save to get the record to show up. We can get rid of this, get rid of that. And the stock ones we need to move down and save. Move that one down and save. All right, so these are good. The collateral can be removed. And now I own 200 shares. And now, as you can see, when the dust has settled after I committed those, my purchase cost basis without including any of the premiums I've received along the way is $32.89 a share. I think it's currently trading right around $19.50 or something. It fluctuates a lot, so it can move back up to 24 within this next week. It can go down to 16 this week. I mean, it's pretty wild, this one. But you can see if you include the premiums, my average is down to 25.62 per share. So I don't think that's doing too bad, considering what I've been through on this one. In any case, we will continue to work this one to fix it over long term. All right, so let's see. Okay, so that pretty much cleans up all the put assignments. So now what I want to do is I'm just going to go back to the very beginning of all the stock symbols that I have in my account. So I'm basically just going to be going through here, clicking next to just go through them one by one and see if I have any positions in play, and basically remove the expired ones, the ones that were not assigned, but just the ones that I made money on and they expired because I play weekly options. So nothing on this one, still nothing. All right, here we had a call, but this one, okay, this is unclosed. This is the one that I had to write, so 12/2. So Thanksgiving week, there wasn't much premium being sold on this one, so I did move it out to the following Friday. So I'll probably do the same thing with this one when I go to start placing the trades in queue to execute tomorrow morning, Monday morning. I usually place them on Sunday afternoon and then just let them set in the queue until they execute. Most of the time, sometimes execute all on Monday. I do have to go back in there sometimes and revise some of them to get them to execute because sometimes the price doesn't hit. So in any case, all right, so this one's cool. Nothing expired here. Nothing there. All right, here, puts. There was 8 puts. It expired. Yeah, it expired this past Friday, so I made money on this one, and they did not get called. So we can just go ahead and remove that position. Clear out the collateral because it didn't take. So this one, we are in the green, total profit for all the trades ever. So I did get out of the stock a little low, but I have enough credits or premium that I've collected on the stock to overweigh that. So overall, I've gotten out of this one with $10.34. As you'll see later in the video, I went back to some of the smaller price stocks just to fix them, because I've come up with a strategy basically of how I can fix them to the point where I can overcome any loss that I've gotten on the cost by the premiums playing it a certain way. And I've been able to do that pretty much with all of the lower priced ones. And I really just did that to get into the profit on them, even just a little bit, even if it's just a penny, just to basically break even on them. And I've moved on to, I think, what are going to be more profitable trades. But in any case, I did it mainly just to prove that I could do it. Sorry. All right, so next one, there's no more positions on this one. Next, just keep on going through these. Grab this one, expired, worthless. So we made money on this one, so we can close that position. Clear out the collateral again on this one. Now see, on this one, I haven't made enough credits to overcome the cost because it's just not paying a lot. Not a lot of options on this one, so I'm still pretty much negative on this one, $70. So I don't know if we'll go back into that one or not. We'll see. Let's just keep on going. This put expired, worthless, so we made money on that. So this one 0-0. Save that. See, this one, we came out of it 86 cents ahead. Woohoo! Go us. It's not negative, so that's a win in my book. All right. Next. All right, this one. Yeah, this one, I got involved with it because it was a dividend king. So, I don't know, I got sold on that idea and had some ideas about it, but as it turns out, I'm not really making much money on this one. I'll probably, for $4,600, I know of other ways to make quite a bit more money, cash on cash return for that dollar amount. So I'll probably, I mean, yeah, it is kind of stable and safe, but I don't know. We'll see. Maybe when I get a lot more money to put into it, maybe I'll play it. Because I can't play this one the way I'd like to play it because I don't have enough money to do it. In any case, we'll see. I'm basically just going to keep on selling calls on this as long as I can. As you can see, I only got $6 for $4,600. That's kind of bad, in my opinion. But we'll just keep on doing it. And until I can, hopefully it'll come back up to 4,600 and I can get out of it. And then I can use that 4,600 for something else. Ideally, I'd like to see it go up to 50, you know, so I could get out of it completely, break even, and then this would be truly profit. But I don't know if it's going to do that or not, and I would rather just use the money for something else that I can make some money on. Anyway, moving on. Okay, this one we just did. Those are stock purchases. Let's see here. I just did that one. Okay, so another couple contracts that expired. So clear that out. 0-0. And save. And see, we're still negative on this one, $51. But we're trying to fix it. Alright, what else we got here? Okay, a call that expired on November 18th. So, yep, we can get out of that one. Okay, so we have 200 shares. Okay, all right, moving on. Next and next. Okay, we have reached the end. Okay, so we've gone through all of our positions, cleared out all of the options that have expired, and we, moved the assignments for stock purchases, so our cost bases are all up to date for all of our positions. All right, so let's go back over to the dashboard. And when I first started, I think this was like a negative 12 or whatever, and obviously after putting in all my positions, it moved down quite a bit because, I purchased it at the put assignment price, and the current stock price is lower, and it updates like twice a day, so it'll pull in basically what's not what the current stock value is. So in any case, we're trying not to focus on that too much. It does hurt to look at, but in any case, the dashboard shows from highest to lowest, the account position size of my, so I have like 18,000 ish cash deposited in here, and my position in NVAX represents like 27.89% of the total portfolio. So that's what this is illustrating here. Um, so kind of what I like to do is you'll see all the little smaller ones that I was talking about, how I've come back in here. Not all of them are red, but some of them were negatives, negative numbers here. And I had gone back into each one and found some options to like put cash secured puts on to the point where I was able to get them all in the green. This one, that's a way I track interest collected on a Robinhood account, so that's not really relative for stock trading anyway. All right, so what I like to do is the first one, SDC. All right, so what I like to do, since this is red, I like to see if I can sell some cash secured puts or something to get it up into the green so it won't be red or negative anymore. And it's a smaller dollar amount, so it should be relatively easy to do. Now, I will say it looks like this thing is trading at 67 cents, so I'm probably just going to avoid it because the only thing I can sell on that is a cash secured put of like 50 cents. And then there's nothing else lower than that to like play both sides if I wanted to, which I'll show you. It's kind of like a little strategy of mine later. So, I'm not even going to look at this one. I'm not even going to put any effort into that. It is what it is, and I'll just, suck it up. Again, that one's low too, so I'm going to stay away from that. But SRNE has some play in it, so and I'm not too negative on it, so I might be able to play something here. We'll see how much the options are trading for. So let's go look at SRNE. Let's see here. So we always try to sell a cash secured put to get into the trade. The next Friday coming up is November 25th. So as you can see, the dollar, there's nothing, no money there. December 2nd, the next Friday out, still no money. So once it gets 1 or 2 weeks and there's no money, I just usually ignore the stock. So yeah, we're out 3 weeks and only $1. So we're gonna forget about that and just move on. All right, so rig is the next one. Let's see if there's any money here. Again, selling cash secured puts. All right, so next Friday. Now see, what was the last price that we have? We have 413, so we are looking for a $4 put. So let's see here. So there is some money there, $6. I mean, if you did the calculations, $6 premium on a $4 stock. So it's like what, 6 divided by 400 times 52 is like what the percentage. I mean, let's just do that math real quick just to kind of illustrate it. I mean, obviously, you are assuming you would get $6 every single week, and that won't work out that way. But, just for a weekly return, I think it's that, yeah, times 52. So that's like a 78% return annually that you're making in a week. So that's not bad. All right. So let's see here. And again, that is assuming it doesn't go lower than $4, which, it very well might. Let's look at the history of this. Let's go like a year. So, yeah, see, I mean, it's back in the twos here. And it looks like it might be in a sort of uptrend going here, possibly. But still, twos. So it's possible that it could go cranking down a lot lower. Here is one thing to look at, because I've been in this stock for a little while. If I just open this up, another tab, go over to cost basis, go over to rig, we can see what I've done in the past on this thing. So see, I sold it then at 261. There was a period of time where I was moving from Ameritrade over to Robinhood, so I kind of just got out of stocks a lot just to transfer them all over to make it all more centralized and easier to manage for me. So that's the last time I got out of it, was at 260. So you can see it's already 413. So yeah, there might have been some money to make there if I would have stayed in it, but I didn't, so whatever. And you can see I've already been assigned before in the past at 400, so I've been playing this one up and down for a little while. So let's go ahead and try this one. I think I like this one. All right, so we're coming back. We're looking at the puts, and we always want to go ahead and just sell. Well, me personally, this is the way I do it. If I'm not in a stock, I will sell a cash secured put pretty much right at the money. I guess that kind of goes hand in hand with a my at the money machine. I try and go at the money to get into the stock. And then once I'm in the stock, then I play above and below it depending on what my cost basis is, because it can only move in one direction. So one of those is going to win 100% of the time, and the other one may or may not get called out. But in any case, so let's go ahead and get into this one. And again, that's $400 for one contract that I'm putting up as collateral. So I try to like to stay around 1,000-ish, so I'll probably only do two of these things for now. So we'll put two, and it's trading 6 to 8 cents. I like to go in the middle, and sometimes I get it, sometimes I don't. Whatever. If I don't get it, then I'll go down to 6. I'll have to wait till tomorrow morning, obviously, to find out. But it hits sometimes when it's in the middle like that. So more money's always nice, right? So go ahead and commit to this. See, $800 collateral. So we'll submit it, and we're done with that one. All right. So moving on. Grab. Let's see if Grab has any. What was Grab? Is at 316. So let's go to Grab. And we'll see if it has anything going for it. Any money in the options. And there was some methodology for how I originally got into these stocks. Originally, they were just lower price, so that's why I was going after them. And there was high percentage returns on the premiums that they were selling. And I was still just learning it, so that's why I got involved with them a long time ago. So we'll look at this, $3, it's 316. There's no money. That's kind of crazy that there's not even $1 here, but it's just the stock. So anyway, but look at, man, that's crazy. Look at that. Thanksgiving week has 0 for the cash secured put, but the next one out has $10. That's wild. I'm almost tempted to do that. I'm gonna go ahead and do it. So let's just do that. So, but I'm putting up $300 collateral per contract. So I am going to play it a little safe. I might come back and add to it. We're just going to go do 2. Oh, I know why this one is doing that. This looks like one of the stocks that only trades in 5-cent increments. So I guess the first week out wasn't good enough for a nickel, so it's down at 0, I guess. You could actually put a trade in there to see if it would trade at a nickel. And I really don't like going past weeks. I usually like staying at week expirations. So I don't know. Let me go back. Let me take this off. Let me go back to here. Put this in. Let me see if yeah, see? It is doing the nickel thing. That's what's going on. So I don't know. This one probably will not execute, but I'm going to go and try it, and we'll see. We'll see if it executes. It can only trade at 0 or a nickel or 10 cents. And who knows? It's 316. That is pretty close to 3, and I don't think this thing has been up very long. Let's go out a week. Yeah, see, $3. It was below $3 less than a week ago. So, I think it might. Anyway, we'll try it. If it doesn't go, so what? Don't really care. If it does, awesome. Okay, so $600 collateral, submit. Done. All right. Moving on to the next one. We're up to Clove. Now this one I'm in. Yeah, this one I'm in 400 shares, as you can tell right here. So I need to go sell calls on this thing. But this one I might be able to play both sides. So let's see. So let's go to Clove. And the thing I love about playing both sides is one of them is going to be a winner. And the other one may or may not fire. So that's what I really like about playing both sides. And that's another reason why I like to stay in the lower dollar amount, so I have enough capital to play both sides. All right. So let's come in here. We're going to sell a call. We should have 300 shares left on this one. Let's see here. So we got one strategy going for one contract, 100 shares. Where's, there, yeah, we have 400 shares. I thought we did. Okay. All right, so we're looking to sell 3 calls Now, one thing to keep in mind is I need to go look at what we got these for. So we got these for $1.50. However, the problem is my cost basis to break even is $1.81, and ultimately I need to be up at 2. But these are lower priced options, so I don't know if that's actually going to be possible. Let's see. So $2. See, there's no money for selling $2 calls. There's only $1 for selling $1.50 calls, so that's not good at all, is it? All right. So let's see about something here. Let's go out another week. All right. See, now that's where I sold one of my calls, and there's $3. Now look at this. Okay, yeah, that would be lower. Sorry. All right. Yeah. See, I really shouldn't be there. I should be up here. Because if it sells at $2, then I'm good. I'm in the money. And I don't care about taking $1 premium for just a $2 stock. I mean, that's, again, do the math, man. Let's see here. So that's $1 for a $200 commitment, basically, times 52. Okay, 26%. That's, I mean, still, you know, if you ask the average saver, that's awesome. But I mean, it's really low in my opinion. But still, if it come up to $2, you know, that's free money basically, because I would make money on top of that. All right, so I'm thinking I'm going to go and try and sell 3 calls at this price. Just to check though, since we are kind of safe in this one, let's go up to the 9th. See, still just $1. So I'm going to come back. Yeah, we're going to try and do 3 here. $3. I know that's, you know, pennies. That's not a lot of money. Percentage wise though, we did calculation, is 26% annually. That's not bad at all. That's really, really good actually. It's kind of funny playing these lower dollar amounts. You don't think that $1 is a lot of money, but on the lower dollar amounts, you know, math doesn't lie. Okay, so let's go here. Review order. We're going to go ahead and submit that. But now that I'm done with that, that's the call side. I want to look and see what the put side has for it, because this is what I like to do. I like to play both sides if I can. And this is a lower price stock, so it's very possible I will not be able to do this strategy with it. But as you can see, $1, nothing. There's no money there. December 2nd, now there is $1 there. And that's for $1. $1, that's only a $100 commitment. So that's probably twice what the other one was. $1 divided by 100 times 52. See, that's double the return. That's 52% return year over annually. I mean, okay. But one thing I would want to check out is I want to check out this. My cost. Yeah, see, man, if I was to purchase, if I was to hit $1, if it was to hit $1, that would lower my initial, or my basically my cost basis without premium considerably, which would get me. I'm thinking it might get me below the $1.50 mark, which would be good overall for this stock. So let me come back here. I'm gonna do some. The other good thing about this is it's only a $100 commitment here, so I'm in it. What am I in it already? I'm in it for $800, so I could do 200 safely, I think, because I like to put about $1,000 ish on pretty much each position. I am curious though. I do want to see what kind of money is out there. Now see, it's still just $1, so I'd rather just collect $1 a week. That's fine. And this one was 0, right? Yeah, it's 0. Okay, so we're gonna sell a put, and I'm gonna just do 2. That'll put me up to the $1,000 total position size. Now, but look at here. It's the trading range is a penny to 3 cents. So I don't know. You know, I always hit the middle, and sometimes it works out, sometimes it doesn't. But I mean, if I was at 52% annually with $1, with $2, that will jump it to 104%, if I'm not mistaken. And that is astronomically good. So anyway, we're gonna go and try it. If it doesn't work out, it doesn't work out. We can always go down to a penny, but still. We'll submit that. So now we are officially playing both sides of this one. So one of them is going to work. If the trade's executed, of course, if I sell the premium on them, one of them will work. It'll either go up or it'll go down, or even better, it'll stay the same and I'll win on both of them. That's that's the best of both worlds. Okay, all right. So now we're coming up on MVIS. Yeah, see, I'm quite a bit net. Oh, well, I have 200 shares. Okay, that's what's going on here. Let's see here. Okay. So let's go look at MVIS. So I have 200 shares here, it looks like, because the put got assigned. I need to come over to MVIS. Yes, we own 200 shares. Now, see, we're at 395, and so I really need to be at a $4 call on this thing. All right, so, and I have 200 shares. So, let's see here. All right, well, where did I say I needed to be at? Sorry, just thinking here. I need to be at 4. 4. Now, see that? Well, this. Oh, wait. Sell. We have 200 shares. We want looking to sell a call. Now, it's only worth $1. And the dollar and $400 commitment is not good at all, really. Well, I mean, it's like probably 5 cents or 5% annually or 10% annually, something like that. But we'll be making this money if it did get up to that. Okay, so we need to sell a call. Can I sell 350? Yeah, see, 350 wouldn't even be breaking even. So, but that is just for Thanksgiving week too. What's the next week out? Still just $1. So, I mean, I'm thinking I'm just going to ride this thing and just make the dollar because that's all I can make on it. And I have 200 shares, so I can do 2 of these things. But look, it did the same thing. It's trading in the middle there, so might be able to squeak out 2. So, let's see here. I'm going to review this. Click done. And I am going to look to play both sides of this one as well, because we're in this one total about $800, a little less than $800. So we're going to look to sell a put. Now look at that. Okay, so $3 would definitely pull my cost average down, so that's really good. And I can get it for $4. See, so here's where we can make some money on this thing. And that's a $300 commitment. I might do 2 of these. It'll put me over the $1,000 position size, but I think it'll be worth it. So, and that's Thanksgiving week too. So let's go for that. Hold on a second. All right, sorry, I had to pause the video and come back. Okay, so where was I with this one? I was going to sell that and possibly do 2 positions. Or sorry, 2 contracts. Now see with this one, it's 4 cents to 9 cents, so that's a difference of a nickel. I might be able to squeak out 2 more pennies on this one. So let's go try for that. We're gonna review this order, $600 commitment. We're gonna place that. All right, let's see where we're going now. Okay, so that's MVIS. So we have a call to sell on MO and we have a call to sell on these guys, and we'll see how much we can do on these about playing both sides. All right, so let's go do rum next. And actually, let's just go ahead and do MO because that'll be an easy one. Because I can't play both sides on this again because of the capital. See, I only got 3,900 left to play with here. So this one I know I only have 100 shares, and I think I'm still stuck at having to sell at 46. We'll see, I should be up at 50, honestly. So 46 is still, I mean, I'm just squeaking out a little bit of profit overall. But again, a little bit of profit overall, I might be okay with that because I can use the money for something else. So we're going to be selling a call Thanksgiving week. See, 46 is only $2. 45.50. See, I still can't do 45.50 unless if I can make 8 cents. If I can make 8 cents on the premium, then I'd break even. What was it? What was that? 40? Yeah, 45.50 is only 4 cents. See, so that ain't gonna work. So yeah, again, I'm at $2. Yeah, it's pretty depressing on this one, not being able to play both sides. Because if I could play both sides, you know, I mean, hell, I could buy it there. Granted, I will say, you know, 44 and 46, that's only pulling it down a little, but anyway, it is what it is. I only got $6 last week, and this one's going to be lower because of Thanksgiving, most likely, because there's one less trading day. So let's go ahead and do $2. We're going to sell a covered call, and yeah, there's not much room there, so we're just going to go for that. So this is really pathetic, but it is what it is, and we take what we can get. And I don't ever really like trading lower than my cost basis, because I've just found that that's how I lose money pretty easily doing that. So making a little is better than losing a lot. So unless if you're playing with a stock that it's just like hundreds of dollars, so like doing a premium sell, you're like taking your cost basis down like a whole dollar, which like NVAX, you can do that all day long usually, even with rum sometimes. So with other stocks you can do that, but this one obviously is a more stable stock, so you're not going to get much premium out of the more stable stocks. All right, so because as the volatility is pretty much what dictates the premium price, at least the large lion's share of it anyway. All right, so we're going to go and try and do this one. That one will probably execute, but I mean, it's like if it comes up to 46, that'll be great because I can get out of it. All right. So MO was the easy one I told you about. So let's go do rum next because I like rum, and we'll do our problem child last. All right. This video is getting a little long. I actually did not realize it took me this long to go through all this. I guess talking and running through it takes longer because I'm explaining what I'm doing and what I'm thinking. All right, so rum, what do we have on rum? Rum, we have 200 shares that we own, and to make all this money as profit, we need to be at $13 a call. And to break even, we need to be down here. All right, so we always look to make money. So we're going to look at the calls. We're going to try and sell a call up at 13. 13 is worth nothing. So that's always good. It's worth nothing, huh? All right, so what's the next week out worth? Now, the next week out's worth $10. So, I'm wondering if I can try to do 13 here, because rum is another one where it only trades in nickel increments. So it might be, yeah, see, look, it's trading between 0 and 10, so I might be able to very well get a nickel pretty easily on rum. I've noticed that some of these trades have been executing at the ones that I raise them up to. So we got 200 shares, so let's do that, right? I got 200 shares, so that would not be too bad. And if it raised up to 13, I would come out of this with the full profit, meaning I would have made total at the end of that I would have made overall total with this almost $1,000, so that's really good. All right, so let's see here. We'll go and execute this, and this is one. NVAX and rum I have been playing both sides on pretty regularly, and it's been working out so far pretty good since I started that strategy, because like I said, one of them is going to win, and one of them may or may not get called. So I'm going to submit this. All right, so now we want to look to sell a put, because we got $4,000 to play with, so I might be able to do like $2,000 for rum and $2,000 for NVAX. So let's see here, and something else to look at is our cost basis with this is 824. However, our cost basis without premium is 13. So pretty much anything that would pull 13 down would be good. So I mean, if I sold a put at 10, it would pull the 13 down to the average being like 11 or 12 something, which anytime you can lower your cost basis without the premium is going to be a really good thing, because then it doesn't have to go up that much higher to make a profit. Okay, so we're looking to sell a put, and look at this. The share price right now is at 10.05, so we can actually do an at the money cash secured put and improve our position by doing that. and that's worth $80. And the funny thing is, it might be worth a little bit more because the range is pretty big on Rome. Um, we'll find out. So I think I'm going to go ahead and do this, and I'll only do one. Now the funny thing is, I said 2,000 for Rome, 2,000 for NVAX, but I don't. I still like to. I'll probably do one put up here and then another put down at something lower. So let me do this. So we're going to sell one put here. See the big range. That's what I'm talking about. So how big of a range is that? So it's 20, 30. It's 30 cents. So the middle is 15 cents, right? So 95. Might be able to squeak out with 95 on this, right? Yeah, that's 30-cent difference. So in the middle is 15. So you might be able to. I might be able to pull out 95 cents, maybe on this one. I'm thinking if the stock market opens and it stays at 10.05 or comes down slightly, it'll probably hit that 95 easy. And if it goes up, it may or may not. So anyway, we'll find out. We're just going to go and place this one. And this is a cash secured put, 95 collateral, 1,000, yes. All that's fine. Okay, and I do want to do one more. Where can I go down on this thing? And again, this is just in 1 week. So, and that's Thanksgiving week, so it's even a short week. All right, I feel pretty good coming down to 8. Because if it came down to $8, I mean that would really lower my cost basis quite a bit. I know it isn't. Well, it might be able to pull out more. Remember, the range is wide. So let's go and look at what we got here. See, 30 cents. So that's 25 cents. So halfway there is like 10. It's not 15. It's 10. We'd have to do 10. So I mean, if I got 15 cents on that, I would take that. That's a good deal. Because I mean, hell, it'd have to come down to $8 to get that. So yeah, I'm gonna do that. Okay, $800. Yes, go. All right, now we're to the problem child, NVAX. And this one, we've been making good progress in fixing this one. Okay. So, yep, I got 2,500. So I own 200 shares of this. So first things first, we need to look at selling a call. And this one's going to be brutal. All right, so we own 200 shares. So see, I need to be at 33 to make actually significant amount of money on this one. I need to be at 33. So, looking to sell a call. Yeah, it's going to be worth nothing. Look how low we are. The 33 is not going to be worth anything. Yeah, 33 is way the hell up here. Not even close. I mean, yeah. That's way low. So, this is one of those ones that I will come down to the break-even point if needed. Now, see, 35 is only worth $1. 30 is worth 8 cents. So, what's 30 worth on the weekly? It was worth 8 cents over there. See, it's worth nothing here. So, one week out, and it'll go up to 8 cents. All right. So, what we do on this one, and that's to make money on this. To break even, I just need that. So, probably look for a happy medium between those two. So 25.50 is, see, just a nickel. But I am planning on playing both sides of this. So that's to break even. And it really needs to be 26, doesn't it? Both of these are nickel. Yeah, not very encouraging, is it? Oh gosh. I'm gonna go ahead and stick to breaking even on this one for now. And if the price comes down, it'll pull my cost average down, and I might be able to play a little bit more aggressively with this. But at least this keeps me breaking even for now until I can get this number lower, and then I can start trying to make money on it. Because as we just verified, 33 is worth nothing, so there's no money at all there. All right, one more time. We need to be at 26 to break even. So I'm just going to go and do this. I got 200 shares of it, so I can do 2. And the spread is 5 to 8, so I might be able to. I can only probably get away with 6 cents. Granted, Robinhood will automatically try and do greater if it can. If you leave it blank, if you let it do its thing, it'll try. I think I'm just going to let it try, because it's not worth a penny extra, because it might go up, might make more, so I don't know. We're going to just stick with that. So that's probably the worst trade I've ever done on NVAX as far as premium is concerned. And I'm just going to toss it up. Maybe it's just Thanksgiving week. All right. So I do want to play both sides of this one. So we're going to sell a put. And so 1950 is pulling $100. Now, as you can tell, if I was to buy 100 shares at 1950, that would lower this considerably. And the funny thing about it is I can actually kind of see what it'll do. So what did I say? 1950. If I was to sell a put at 1950 for $100. Now, see, that's for $100 too. So to really try and do it, so here's what you can do. I can put a test here, and I can put $99, and I can save it temporarily. So you can see that lowered this number a bit. So let's go ahead and do 300 and 1950 for collateral. See, it'll pull my average down to 28.43, and it was at 32, and 28 is closer to being worth some money. So we can work this down by doing this. So let me go and delete that test, because that was just a test. Go ahead and move this back. All right, so we're back to the 32.89. So, I mean, if I was to buy 100 shares in 1950, that's not bad at all, because, like I said, it's pulling this down to, what do we say, 28, I think, or something like that. It's pulling down several dollars, and obviously it's only 100 shares, so it can't pull it down too much because I already own 200. So it's only pulling it down like a third. So anyway, let's see what we got here. Yeah. I kind of am in the mind it always improves your position to lower it like that. 1950, that will pretty much take out all my buying power. And this is only 50 cents less for, like, what, 22-cent difference? I'm going to go with this one. If it goes down, it's going to hit it, because NVAX just moves a lot. I don't know. I'm just going to go with it on this one, because it will pull down my overall average entry, which is a really good thing. And this thing has been fluctuating quite a bit. I think I saw it go as low as 16 in the recent past. So we're going to stick with this. I'm just going to commit to it and stick with it. Yeah. And yeah, see, look at that. Okay, so 3, 13, 14 is 14 cents, so 7 cents. So I might be able to squeak out 84 if I did my math right. 3 cents to 80, and 10, 13, that's 14. 7 cents, yep, 84 cents. So we'll see if this one flies. And it's 1900 collateral. All right, done. So what? Yep, my buying power's down to 459. Okay. All right, and I think that's it. I think that wraps it up. I've been through all my positions. I've used all my buying power. Just go to the home page. So the buying power is down to 459. I may just sit on these and wait to see how these play out tomorrow morning, see which ones execute, which ones don't, and then finagle the numbers to get them to execute, or just forget about them altogether. And some of these lower priced positions, I may or may not use this money to enter another put on the other side, possibly on like MVIS or Clove, or maybe even grab a rig. We'll just have to wait and see how the executions take place tomorrow morning. But other than that, I do need to make sure. So NVAX has some calls on it, right? Yeah, it has the call. MO has the call, yes. Clove, I think we already verified, yes, has the calls. MVIS has the call, yep. I'm just making sure all my stocks owned have a covered call coming up on them, and they do. They do. Yep. Just always want to make sure my stocks are working for me. But in any case, yep, that was the weekly review. I do this every single Sunday, and I'm planning on recording it every single Sunday to give you guys a good idea of how to use the application, the myatmm.com web application, to kind of show you how to use it. And also, if you guys are interested in this web application, it does offer a free account. You guys can sign up for it anytime. It's a free account. You do have limited access. I think it only lets you do 3 stock symbols. And there's also a covered call analyzer screen that I'll just show you right now. It only allows you to do 10, but it shows you quite a bit of information that you can search by, and you can look at these percentages, sort by the ones that are, doing the highest percentages or not. And anyway, in any case, like I said, you can go sign up for your free account, and you can get in here and start messing with this thing. And you can leave your feedback, report any bugs or feature requests that you come across. And other than that, have a good day. I will talk to you guys later.